Hey everyone, welcome back to the channel. Today we're diving into a topic that a lot of you have asked about, penny stocks. You've probably heard the term thrown around, maybe in movies or online forums, with promises of turning a few bucks into a fortune overnight. But what are they really? Are they a golden ticket or a risky gamble? Let's break it down. First things first, what exactly is a penny stock? The U.S. Securities and Exchange Commission, or the SEC, defines a penny stock as a security that trades for less than $5 per share. Now, you might be thinking, $5? That's not a penny. And you're right. The name is a bit of a throwback to when these stocks literally traded for pennies. Today, the $5 threshold is the official definition. These stocks typically belong to very small, often new companies. Think of a startup that's just getting its footing or a company that's struggling financially. Because they're not big, established players like Apple or Amazon, they aren't usually listed on major stock exchanges like the New York Stock Exchange or the NASDAQ. Instead, you'll find them traded on what are called over-the-counter, or OTC markets. This is a key difference. Major exchanges have strict financial and reporting requirements for the companies listed on them. OTC markets are much less regulated, which means there's less publicly available information about these companies. This lack of information is one of the biggest risks, which we'll get to in a moment. So why does anyone even bother with penny stocks? The allure is simple: huge potential returns. Imagine you buy a stock for 50 cents. If it goes up to just $1, you've doubled your money. A 100% return. If a stock like Google, trading at thousands of dollars, were to double, that would be a massive headline-grabbing event. For a penny stock, that kind of volatility is almost normal. This potential for explosive growth is what attracts so many people. It feels like you're getting in on the ground floor of the next big thing before anyone else. But now, let's talk about the other side of the coin, the risks. And believe me, they are significant. The number one risk is the high probability of losing your entire investment. Remember that volatility we just talked about? It cuts both ways. A stock that can double overnight can also drop to zero just as quickly. Many of these small companies fail. They run out of money, their product doesn't take off, or they simply can't compete. When that happens, the stock price plummets and your investment can become worthless. Another major risk is the lack of liquidity. Liquidity is just a fancy term for how easily you can buy or sell a stock. With a popular stock like Tesla, there are always millions of buyers and sellers. You can trade it in seconds. With penny stocks, that's not the case. You might buy a stock, see its price go up, but when you try to sell it, you might find there are no buyers. You're stuck holding the bag while the price drops back down. It's like owning a rare collectible that no one wants to buy. Then there's the dark side: scams and manipulation. Because the penny stock market is less regulated, it's a breeding ground for fraudulent schemes. One of the most common is the pump and dump. This is where a group of people buy a ton of a cheap stock, then use social media, email spam, or fake news releases to hype it up and create a buying frenzy. As new, unsuspecting investors pile in, the price shoots up. That's the pump. The original scammers then sell all their shares at the inflated price, the dump, making a huge profit and causing the stock to crash, leaving everyone else with massive losses. So, should you invest in penny stocks? For the vast majority of people, especially beginners, the answer is probably no. The risks often far outweigh the potential rewards. Building wealth through investing is usually a marathon, not a sprint. It's about consistent, long-term investing in solid, well-established companies. If you are still determined to dip your toes in, you absolutely must treat it like gambling at a casino. Only invest money you are completely prepared to lose, what some call Vegas money. Do your own thorough research. Be incredibly skeptical of any hype, and never ever invest more than a very small percentage of your overall portfolio. And remember, if an investment promises guaranteed sky-high returns with little risk, it's almost certainly too good to be true. I hope this gives you a clearer picture of what penny stocks are all about. They can be tempting, but it's crucial to understand the full story before you even consider putting your hard-earned money on the line. Thanks so much for watching. If you found this video helpful, please give it a thumbs up. And don't forget to subscribe for more content on personal finance and investing. Let me know in the comments if you have any experience with penny stocks, or if there are other topics you'd like me to cover. Stay safe and happy investing.